Hi, everyone. Hello, Alexander, Richard, Hugo. Everyone doing okay? Yields are giving up a little ground today, almost making that look like a false breakout. But I just think that this move is just too strong for it to abort, that, that this line is, not a breakout line. So I still think that we're going to flag here, consolidate this straight line move and head higher. Maybe we could get back to these previous levels, 132 or so. So what impact did it have? Higher yields, about 2 days worth of higher yields, really cracked the gold. Okay, so the gold sitting on top of this support level again, and with yields coming off, maybe it'll bounce. But I'd say the greatest impact was felt in the gold market, not as much in silver. Hi, Orion. Silver looks better to me than gold. Look how much deeper this was than silver. And silver still has a confirmed high up here, whereas gold does as well. But I think there's lower levels. Maybe look at something like 1810, 1814 for another break. I don't think that's going to be it. The dollar, decent rally off higher yields, 60 pips. If we didn't have the holiday off, this would be a turnaround Tuesday. I'm still not convinced this is the low in the dollar. So looking for another selling opportunity in the Dixie, another buying opportunity that might be setting up right here in the euro. Yen, despite yields being down, trying to hold. Yen's been difficult to get follow through. So I still think there's a chance that we head up towards this high, towards 112. Back under these lows of 109.5, I'd be out of any kind of longs here. The S&Ps felt the pressure of yields yesterday. We had a decent 2-day break, day and a half break from almost new highs to 4,500. S&Ps are acting heavy, whereas the NASDAQ still really carrying the whole market. Crypto crack, that's true. We talked about that yesterday, about that the potential of this being the end of the rally up here at 52,000. Look at what it's holding. Is it going to hold it and rally to new highs? I don't think so. So what was it? El Salvador that is making crypto a national currency. So I'd say this is the first real good beta test for trying to use Bitcoin as a currency for everyone. Let's see how it goes in El Salvador. I heard that the Sandinistas came in and switched all the Bitcoin that the populace was going to get and exchanged it for doggy coin. Sansi, a good retrace lower. Okay, thank you, Sansi. Sansi's a very good trader. I've watched his commentary over the years. So when he has an opinion, another good reason to be here in Face. We have some very educated traders in here, but you know what? If you like Sansi's comments, you're really going to like the action in our members chat, because that goes on all day and evening throughout all the different sessions. So you'll never be alone in there. Okay, and recommend that you guys sign up. Big believer in communities. I think you'll trade better in a community than you will on your own. You'll get more ideas. You'll see more methodologies, more techniques. I do also believe that people in there want to help you. You could reach out. Never know, someone might take you under their wing. That's how a lot of people learn how to trade, is that someone reaches out to show them how they do it. And you may pick up some pearls that you could implement in your own trading strategy. So consider this. At least try the trial for $1 and check it out. Okay, Richard's a fan of Ryan. Ryan's very good. In fact, that's a great segue. How are you this morning, Ryan? Are you
Yeah, hi
around?
Dale. Yeah, I'm here, mate. How are you, mate?
Okay, pretty good. So Richard's been with you for a while, right?
It
Richard
seems to be.
Adams?
Yeah, it's always been in tune with what we've been doing since we come over. And thank you very much,
Okay.
Richard. Checks in the post.
Okay. All right. So kind of a quiet day today compared to yesterday. Anything that you see? I mean, yields did not hold that pretty important level.
No, that's right. What did we say? What did we say yesterday? We said, you suddenly get a move. It looks like it's all going your way, and then wallop, you get a fake
Yeah.
break, and it all turn. You wake up next morning, and it's completely turned around.
Yeah. So I mean, I can't call that a breakout anymore, because it really didn't. It meant something intraday, but not today. Maybe a false breakout, I could call it.
Yeah.
So yeah, a lot
The
of
only thing
false
is we've
signals.
just we've just nicked a fresher high, and that to me
Okay.
is a signal in itself. It just shows that perhaps the top is starting to crack a bit more,
Okay.
rather than being the solid wall it is. But it hasn't made much difference to dollar pairs today, and we saw a bit of yen buying coming in this morning, and that's kept the majors under pressure, like cable and euro dollar. We've seen those down. The euro dollar down towards 118.10.
Yes.
I've been slicing my short off as we go. I should have probably done something at 13, but wanted to try for 05s. But then,
Okay.
as we say, we've got to look at the levels, and if we are to turn around the turnaround, if you like, we've got to get back above this 1830 level, then back above the 5060 level. If we don't do that, it keeps the bearish pressure in play, and then perhaps we get a test of 1800, get above sort of 1850-60, and eyes are back on 1880 and 1900 again.
Yeah, if it doesn't dig its heels in here, Ryan, it almost looks like it could pull back to this pivot. Has been, there. Both sides of the pivot usually get some kind of follow through at 17.5, and would kind of have a look of a head and shoulders type of formation down here at this 17.5 level if the dollar decides to continue to be firm for a bit longer.
Yeah, exactly. I was saying this morning in the room, we need to get through 1790, probably 1780, to confirm the next shove down to that 1750 level.
Okay. And the commodity currencies gave some back, but I don't think they're over yet either. I think we could still maybe see, this is a pretty big area right up here where the 50-day is, 75.30, and then 76 all the way up here. I'm not sure if we're going to be able to get up to 76, but if the dollar's still going to fail one more time and head down towards 91, that could happen. Any feeling on what you saw in precious metals yesterday? Pretty good whack in gold.
Down to the levels again. We've been looking at that around that area, that sort of 1800, 1790 area for a long while. Got the line in there, as you say. If you want to trade it simple terms, there's your level. You try longs, keep it tight, and if it goes against you, then you reverse it. It's one thing looking at moves and seeing the same old thing day in, day out, and seeing these reversals and fake moves. They're still producing the levels. That's what we've got to look at, and that's what you got to trade.
You ever notice that at times you'll see one formation become predominant in a lot of different instruments? And we just talked about potential of if we went to 1750 in euro, that would form a right shoulder. Well, if we went to 1750-ish in the gold here, that could be a right shoulder. So the neckline's clearly defined. So if we didn't get a breakout here, they just looks like they went on a little stop hunt. But next time through 1830, it would measure 1960. So from this low, so things were turned back right where they were going to break out. So, we turned the gold back, and now we're turning the euro back, and we'll see if there's just another few days follow through. That's going to be the test of to see if the dollar can sell off again. So that's about all I see. And the S&P took a pretty good hit yesterday, and they're following through today. Rounding top here, 4,500, 4,400. I don't know why we can't do this. So I would pay attention to this. Ryan, I was taught this a long time ago, such a simple method. In fact, I learned it from a guy who wrote a newsletter out of Naperville, Eric Haydick, and he uses 2-week reversals. Of course, you don't know if you're going to have a reversal till Friday, but we're within striking distance. In fact, we traded underneath it. Under 45.11 by Friday would be a 2-week reversal in S&Ps. So that'd be the first one in a while.
So let me ask you this, Dale, because we're seeing a bit of weakness in stocks the last couple of days, and that's following the run up in yields that we got post NFP. Is that the market perhaps now really getting into the taper thing as far as stocks are concerned? Because, yields pretty much ignored the bad NFP. And that was a standout thing we highlighted on Friday. So is our stocks now perhaps taking a bit of a notice? If we get a day today of losses, is that going to start setting a trend into the taper?
I've always heard that it takes a spike in rates for bonds usually lead the way for a correction, and then they rally big when the correction starts in equities. And I don't know why they wouldn't take notice of rates, because this was not much of a, with all the bond buying and everything that goes on by the Fed, this was not much of a rally in TLT. So I would say if we start taking out this 139, Fed will keep buying everything. But if they're buying everything, Forex scale, my question is, if they're a bond buyer, why aren't the bonds 162 instead of here at 146? And basically they broke down here and they're just testing a breakdown. So whatever the Fed is doing it's not effective there. What's interesting, and I look at these two things and I want to get the rest of the crude in, is that people are buying junk high yield bonds because you get a higher yield. But look at that compared to investment grade corporates. And when you talk about investment grade corporates, that's the equities that you trade. Much weaker structure in investment grade something compared to junk everything. So, and the guest we had on yesterday said that the not so much each market, but the credit spreads between them started to widen out a couple of weeks ago when we had a little sell-off, and they haven't come back in. So that's kind of a little bit of a yellow light too.
You know who you need to get on next on the face, Dale?
Who?
Fed's Kaplan. Have a little chat to him about his positions.
Yeah, I'd like to talk to him. I'm actually trying to schedule a guy who's on Twitter who is with the St. Louis Fed, and then just sick Steve Volge on him. So I'm going to, Steve, if you're here.
Boy,
I'm okay. I'm trying to get this guy from the St. Louis Fed to come in, and
these people don't really want to answer questions, and that's why, if you notice, in press conferences they don't really get asked real questions or the tough questions, and when they do, they just give an answer that's irrelevant to what was asked, and they move on.
Well, anyway, I thought I'd throw you a piece of raw meat.
No, sure.
And see what you could chew the guy up. Seems like a nice guy, but I'll let you know. And I'd like you involved in that interview. It'd be interesting to see you take on a Fed guy. So just thought I'd let you know you have something to look forward to. All right. Blake, how are you? And Stell, how are you guys doing today? Kind of quiet?
Good
Quiet day.
morning. All
Good
good.
morning, Stell.
Morning.
What's up? Good morning, Blake. How are you?
Good.
Okay, good. So I know you always see stuff, Blake.
I think a lot of key levels were tested last night.
Okay.
Lots of them.
Yeah.
Lots
All
of
right.
them.
Okay. So Stell, we'll let Blake take over the screen unless you wanted to. Anything to report that you saw overseas?
Overnight.
Yeah. Anything worth
No, I mean
mentioning?
the main thing seems to be cryptos.
Oh yeah.
Last couple of days, and it's funny because we talked about El Salvador adopting Bitcoin as legal tender,
Yeah.
and all the crypto fans were rejoicing, and the move we've seen has been, well, very different to what I would have expected. I actually don't know why we sold off that hard. If anybody does know, let me know. But they remain very heavy, and obviously it's a correction in an uptrend. I mean, in the grand scheme of things, but still, it's not what I expected. But apart from that, it's been after yesterday's moves and metals got smashed quite a bit, but we're kind of returning to a quiet session today, and metals are trying to claw back some of the losses, and the dollar is still looking pretty good. It's trying to rally. It's not convincing yet, but as I've said so many times, I think yields are the key for everything, for stocks, for the dollar, for yen, for everything basically. And as long as yields are not breaking out convincingly, I don't think we're going to see anything materially different to what we've had over the past weeks.
Okay. Blake, I remember you saying that Bitcoin was ready for a correction at 52,000.
It's interesting actually going back to Bitcoin. There's a lot of very, very bullish FinTwit people yesterday and the day before the move lower. We had one of the guys pump. I can't pronounce his last name. Pompliano. That's it. He was he made some comment on Twitter about it being up 400% this year, and then there's another guy who's got hundreds of thousands of followers too. He's mostly a stock market and currency guy, and he's kind of turned more crypto bull than anything. He made some really bullish tweets just before the move lower, and I think everybody's getting pretty comfortable with the move above 50,000. Then to see a 20 some odd % correction, no matter what you're trading, it's got to hurt a little bit. And so when we noticed Bitcoin yesterday, here's your update on ForexAnalytix. We were just basically at horizontal support, and this is 21 hours ago. Huge horizontal support at the 43.30 level being tested. Watch for a bounce, and obviously we bounced really aggressively from there. But man, I think that puts a little bit of the bulls on notice right now with the crypto markets. I think one of the longer term, structures that you got to look at with Bitcoin and any of the other cryptos is we are making lower highs as of right now. So that's a bit of a shift in the trend. I'm not necessarily bearish cryptos, but this is a kind of a warning, I think, to everybody that the everything rally is winding down here. And that's one of the things that we've talked about, especially on the private ForexAnalytix webinars, like the everything rally. You're seeing everything from yen weakness, euro yen's bouncing aggressively, the Aussie yen's bounced aggressively, stocks are at all-time highs, just the normal, just all all boats are being lifted.
Long the world.
Yeah, I mean, get long everything, sell dollars, whatever it is, just get long every asset you can. And we're starting to see, one by one, some of these assets are showing some signs of fatigue. And I think cryptos are another asset class that are showing a little bit of fatigue. But, when you get up, or like for me, a North American trade, I get up in the morning and I look around. I actually think last night was a very active night. I think last night a lot of key levels were tested and hit and rejected. So let's talk a little bit about just some of the majors here. If you're part of the ForexAnalytix community, you have been listening to the webinars, the private webinars, where we've talked between the euro is going to trade between 118 and 119 ahead of the ECB. We tested the lower end of the range, which is basically the 38% retracement, 118 level. I did expect us tomorrow to be sitting right here. If you listen to yesterday's, daily roundup recording, I thought we would test 118 and then bounce back to 118.50. And then we're going to figure out, where we're going to go following the ECB. I think that's going to be pretty telling. The ECB, I think, is going to be relatively hawkish, believe it or not. I think that they're going to kind of pave the way for the ECB to actually start tapering in the future. Whether or not they do and they follow through with it is another thing. But I think that tomorrow's ECB meeting might be a little bit more hawkish than the market expects. You go to the Aussie. The Aussie is come off, and actually the resistance in the Aussie overnight, which was key. I was sitting there at my son's soccer practice and we were trading above 74 cents. And I'm like, man, if we could just squeeze up to 74.10, I'm going to be, I have some sell orders between 74.10 and 74.15. We didn't quite make it there, but as we noted in the overnight session in the Aussie, and again, this is if you're a ForexAnalytix subscriber, the right here, end of day analysis, look for sellers above the 74 cent level overnight. That was last night. And we basically probed above 74 cents and then slipped, 50 pips. That's a pretty big move for the Aussie dollar. And you have to also imagine that now we're going to find some buyers as we near the 38% retracement. But I think the key, and one of the things that actually really has to be noted here, is the S&P at the actually there's two things. The S&P here at 4,500, which again, if you look at ForexAnalytix, the 4,500 level, 4,500 level support may come into view in Asian trade. Well, we slipped 4,500 and bounced like a bat out of hell. And when we did that, everything turned. Now I was sleeping when that happened, but the reason why that's so important now is that now that you're going into North America, we know what's key. This 4,500 level is key. And I wanted to say one last thing is look at the DAX. The DAX basically hit. Wow. Yeah, it hit wedge support and then bounced pretty aggressively too. Now the DAX is coming off right now, the last 30 minutes, which is kind of impressive actually, if you think about it. But the DAX had bounced pretty aggressively from that key level support. It's wedge support. All right. So
we're on the verge when
I get up,
Blake, we're on the verge of a few. It looks like we're finally maybe on the verge of I
don't want to get excited about it, but I know where, the thing about trading is, where the break points are in the market.
Right.
And we know where they're all at. I mean, S&P is at 4,500, DAX at 15,600, the euro dollar support at 118, I mean, the Aussie, resistance at 74 cents. And just as Ryan said a little bit earlier, where the levels are. So, the market's forging these levels in the market, and we know where the break points are going to be. So I think we need to, obviously we have the Bank of Canada today. And by the way, the dollar Canadian, I mean, this is perfect. I wasn't around, but yeah, we ripped up to 127 key resistance that these held. And now, ahead of the Bank of Canada, that's it. We break if the Bank of Canada is a little bit more dovish, which by the way, everybody's expecting, nothing to happen here for the Bank of Canada. But let's say they're a little bit more dovish. They're worried about COVID, and it doesn't seem like they're going to taper anymore, or they put everything on pause. We could rip past 127 here. So, but we know where the break point is, and that's the good news is if we break through 127, then we know that we probably have a good 50 to 70 pip rally ahead of us, and that's, hey, if you're getting into a trade and we're a good an easy way or an easier way to make 30, 40, 50 pips, that's all you need, right?
Yeah,
you just wait for that trade.
Yeah.
So anyway, I think some pretty key levels got tested overnight, and that's why when I get up and I go, it's kind of slow. You got to go back and look at price action when you get up. I mean, that's the first thing that I do is I have to look at everything, what happened everywhere. And I don't catch everything, obviously, but finding some of these key levels or developments overnight are really important. So anyway, Ryan, Stelios, Steve, did you guys see anything else that I might have missed? I know you guys are up when I'm not around. So these are just some of the observations that I noticed.
You could have been a detective.
That's right.
You notice everything.
No, it's not that, but it's important, again, as traders, these little nuances are, the difference between, oh shoot, I missed that move and being able to catch the move, knowing where these things are taking place. So
yeah, spot on. You're spot on, Blake. I joked when I got back from holiday, euro dollar was at 118 when I left, and it was 118 when I got back. And yeah, that's great. But what I spent the next few days doing is find out what happened in between. What happened when it broke 1700. Before going away, I would have been a buyer at 1700 because there was option barriers down there. It was solid support previous to that. So likely it is I would have done some money on it if I had my stop, around the 80 level. But you've got to learn, and it's the same intraday. You're coming in the morning. The price may be exactly where you left it the night before, but what's happened in between? Have we broken any levels? Have we touched any levels? What has it done with those levels? And as you say, you either get levels that then get confirmed, like 127 in the loonie, or you get a break and you think, well, okay, now that 127 level is going to be support perhaps. And that's how you assess it. Every day is a learning process, as we know.
Totally. 100% agree. So, and it's just really, really important that, I think that, as traders, you just have to realize that when like a level that you've been watching, when it breaks, look for, rather than just jumping in, like here's a good example. Yesterday I tweeted, and I haven't been tweeting much recently just because, obviously, we're in a one-way market in the S&P. So it's like, all these little nuances are shared amongst the ForexAnalytix community. I don't need to share, big deals in the FX market because we just don't, there's nothing really happening at the moment. But the US dollar Norwegian krona, I put a tweet out yesterday that we got a big double top, but it hasn't been playing out lower. And I said, if we get above 873, it could be, it could turn the other way. And what happened last night is we actually rallied to 873 and 8.73 and just a couple other pips. And then it slipped again, but it just showed you how important that 873 level is. And that's why when we get to these resistance or support levels, you got to look for sustained moves. Like if we get a sustained break above 875 now in the US dollar Norwegian krona, this thing is now, you just wait for it to sit up here for more than, 30 or 40 minutes. And we'll trade up pretty aggressively. That would be my assumption. So now we already knew that that's where our break point is, and now it's very clear where it's at. So again, knowing where they're at and looking for those sustained breaks, I think is going to be really critical for you guys and your success moving forward. But anyway, I know that it's time for Dale to bring in Kirk Spano. He's one of your guests that I've heard here before.
Yes.
So I want to say, Stelio, Steve, Ryan, thanks for joining in today, and thank you guys for listening in today. And we're going to see all the ForexAnalytix subscribers on the morning edge in about 45 minutes, and then we're going to go through all the majors and build out our bias chart. So we'll see you there.
Cheers, guys.
Thank you, guys. Good hunting today, Ryan, Blake, Steve, Stel.
Cheers, mate.
The best
Thank you,
team
Dale.
on the net.
Thanks, Dale.
The dream team. Okay, so Kirk, want to welcome you back. I'm trying to make Kirk panelist. It's not allowing me for some. There we go. Okay. Welcome, Kirk. Welcome back, buddy. Waiting for you to unmute.
Unmute.
There you are. Look at your black lab.
Yep.
Is that yours?
I'm rearranging my office right now, so I don't have a camera set up.
Okay. Do you are you using a laptop? You want to show any charts or anything?
Well, I do, so I will share my screen.
Okay.
I think that just worked.
Yeah, peak oil plateau.
There you go.
Wow. Will fall by 2030. Okay. So let's talk about this. So is that EV? Oil demand will fall because we're all going to be driving electric vehicles.
We're going to see oil demand fall for these two key reasons. There are many key reasons for why the oil demand will fall, but ultimately the oil price will fall. The EVs, if you take a look at all the mandates around the world, you have 18 governments now, major governments, not little countries, but big countries that are on the pathway to eliminating ICE vehicle sales anywhere from 2025 to 2035. I think in the United States, it'll probably be 2035. But Europe just got very aggressive over the summer. You're already seeing it from China and India. And that's on top of the incredible efficiency that we're seeing with EVs. But it's not just the EVs, although that's the one that gets headlines. The utility systems outside of India and China are already bringing down their fossil fuel use, in particular coal, but also oil. And you're starting to see petrochemicals get substitutes for feedstocks. And I think that is going to be something that almost nobody sees coming.
Okay, so explain that. There's oil in current feedstocks?
Right, plastics, petroleum, petrochemicals.
Okay.
I
don't know. I thought of agriculture when I heard feedstocks.
Yes.
But
okay. Right.
Okay,
so,
and that's not what you mean, right?
No. But agriculture is part of that game, actually.
Okay.
There's companies out there now that can pull the carbon, the methane and the CO2 out of dairy farms and water treatment plants,
right?
Power plants, and they can turn that into plastics,
energy.
Actually.
And also energy. I think don't they have a lot of these farms, chicken farms and everything, they produce all this waste that kicks out methane, and there are I forgot what they're called, but it's almost like a big cauldron that converts this stuff to energy. If you could have storage that you could convert the waste into energy. Have you heard of those things? Huh?
Yeah, there's a company in California that I'm invested in called Aemitas, AEMITAS, and they have a big jump on carbon capture and sequestration and renewable energies in California, a big first mover advantage. And what they're doing is, the simplistic way of putting it is what you just did. They get a big pile of poop and they turn it into energy, and they can farm it off to other companies or the private company in California that can turn it into plastic.
Okay. Yeah, or even sell back the energy to utilities. Yeah, this is the new wave. Do you think there are going to be a lot of, well, first of all, Kirk, do you think we're going to get an infrastructure bill to support some of the things that you're saying here? Would things like this be included in the 1.7 trillion, or is it more about the other one, which is, I believe, more about social infrastructure?
Right.
What do you see coming in that first bipartisan bill that is going to support your narrative?
Well, so here's the problem with the current legislation is it's a little bit light on the clean energy stuff as far as I think it should go, but it's more than we've ever done. And presuming that Joe Manchin doesn't hold up the bills, because there's actually another short idea there. But presuming these bills get done roughly as we've heard about them, the movement towards clean energy will actually come through the regulatory process, not so much through taxation. And, it is accelerating. Is it accelerating as much as the Super Bowls on clean energy want it to? No. Is it? Is oil going to all of a sudden be the fuel that we use until 2050? No. There's always that in-between thing, and I think these bills are in between. And I'm not positive that they get passed in a way that is going to supercharge any of this, because Manchin is very pro, fossil fuel. So we'll see. But it is a step in that direction, but it's not the supercharge event that people on the left want it to be.
Okay. What do you have for us after this slide?
So
is this it?
Yeah, I kind of go through the history of this in the presentation, and I have this available. I should edit it one more time, but I have a whole presentation available. These are things that I said way back in 2014.
Okay.
And a lot of these things have happened. In the parentheses, I put some of the changes. I was at CES a year and a half ago, and it became apparent to me that hydrogen was going to have a role in energy storage and heavy duty vehicles. The demographically based slow growth forever thesis that you're starting to hear play out in the news again about growth slowing down from the rebound. All these things are happening. And I think that for the oil trader, I really actually think that the price of oil is going to be relatively range bound for several years. And the thing that you're going to see happen is eventually the markets and the governments, and I think the government's already realized, and I think OPEC already realizes that the oil age is, into that second or third inning of the end of the oil age. And as they get to the middle innings of the end of the oil age, countries that rely on oil production are going to produce more oil, right? Because they need to get it to market. So that's going to create an event for U.S. oil companies that is not going to be very positive. You're going to eventually get that last wave of oil company bankruptcies. And I think that there's a trade coming 3, 4, 5 years out, right? But shorter term, as you're showing on your chart there, you could get, a wavy period in oil. I don't know if you see, that 45, 42, 50 price in the short term, but you could, because the economy is just not growing as fast as people want it to, right? We saw this rebound, and the rebound is kind of tailing off. And a lot of the hopium on oil was based on the rebound being very, very sustainable.
Okay, so you have a take on the overall market, Kirk? I mean, 45.40 it's has been the recent high. Do you think this market is set up for any kind of disappointment? I mean, these are the only kind of breaks we get, very orderly. Do you have a line in the sand for where you wouldn't want to have stock exposure?
So I have been cutting back on my S&P 500 exposure forever. And I've been getting involved with some of the meme stocks, some of the cryptocurrencies. Shooter, your buddy, has been helping me out there. Yeah. And I think that the S&P 500, there's a very important stat to remember. 70% of the cash, 75%, right in there, of the cash on corporate American balance sheets are on the NASDAQ 100 companies, which are all in the S&P 500. So you essentially have 100 companies that have 3/4 of the cash, and the other 400 companies, the last quarter of the cash. So what does that say about a quarter of the companies on the S&P 500? They're relatively junk companies, a lot of zombies. And I think that you can selectively short the heck out of the no growth companies on the S&P 500 because most of them don't have good balance sheets to boot. So you've got 100 to 200 stocks on the S&P 500 that I think, are just really easy shorts. And I'll show you my S&P 500 chart in a second here. I'll pull it up for you.
Okay, you have to take the screen. I'm going to stop sharing and because I was showing some things.
So I have a pretty big. Here you go. So this is my S&P 500 chart.
Okay.
And I've talked for a long time about how that period, 2015-16, that flat 2-year period, choppy 2-year period, was kind of the baseline for the market.
Mm-hmm.
And because of low interest rates and QE, the channel for the stock market has risen to this green one. It should be down here, but it's not. And if interest rates are low forever, maybe then the higher channel is permanent, right? But I point this out to millennials. And I say, look, with the exception of dividends, 2% coupon, there is a very long period here, about 13 years before the S&P 500 broke out again, right?
Mm-hmm.
I think the next decade could be a lot like that. So I think there's a little bit of cigar puff left. I don't know that we really get up to 500 here in the short term, but I think you can see a zigzag motion filling out here for the decade. And my big thesis for the 2020s is that the bifurcation in the quality of the S&P 500 is going to keep that index bouncing around. And each time it'll set a little higher high, just because that's the headline and we have to have it. But I think that you're going to see a pretty choppy period. I think that the S&P 500 could get down to around 350. I think it's close to its top point. But I think that the Reddit army, the apes, the retards, that's what they call themselves, are probably right. And I think, the money printer goes burr at some point. So, wherever we end in here, come down to around here. And if there's an Armageddon scenario, it could go lower. I just think you see something along these lines over the next decade. And it's going to be driven by those zombie companies eventually getting killed. And there's going to be a lot of them getting killed in the middle of the decade because the Federal Reserve facilitated their debt get extended. So when their debt is really due, and it was going to be due in 2020, 21, 22, now it's due in 24, 25, 26, the correction that I expected last year, even before coronavirus, I think was going to happen either way. And now we've just pulled the timeline back 4, 5, 6 years by refinancing everybody's corporate debt. But the whole slow growth forever thesis that I've been talking about in Market Watch since 2012 is, look, demographics dictate the pace of the economy, and we just aren't going to see a lot of growth. That's one of the things I mentioned with the oil. There just isn't a lot of growth. There's a lot of refurbishing of the economy, but the post-World War II and then baby boomer driven growth periods, and then the emerging market, particularly China, getting people into the middle class, those things are all gone. So the only way to have a lot of growth is rebuild the world and make it sustainable. Maybe that's just the excuse. Maybe none of the clean energy and climate change stuff is real. I don't believe that, but even if it weren't, the governments need a way to create growth. And maybe that's what they're using. Who knows?
Okay. Do you think that the government and this current administration is going to upset the apple cart in big tech with antitrust regulations, et cetera? Is that an overhang for the best performing group as of late, the FANG and MAGA stocks?
I think you're going to get a rerun of what we had, whatever it was, 6 or 7 years ago, when they got called to Congress. Everybody got their sound bites and got their PR moments, but this would be slap on the wrist.
Okay.
Maybe Instagram has to get spun out of Facebook. So what?
Okay. How about what China's doing? The draconian measures they're taking with tech stocks. After 2008, they were not as weak as the rest of the world. They didn't suffer from the Great Recession as much as we did, and they were actually were attributed as the engine of growth that helped, besides central banks, help pull us out of it. Do you think they could, the Chinese could, which are having some difficulties, almost self-inflicted, that they could drag us down?
So I've got a lot to say about China, so we would probably need an afternoon and do a long form. But
okay.
I think that, well, let's put it this way. For 2 years, I've been telling people to sell their commie stocks. And the reason I say it is because I've always thought that G was untrustworthy when it came to protections of your property rights and your capital. And this decline in the emerging markets, internet and e-commerce ETF from here to here was part a blow off, but it was mainly the Chinese stocks. And we've gotten a rally, and weirdly it hit right on my 618 line, because that never happens. And it'll probably come back down here again. And then the question is does it head all the way down here? I think that China is at risk of decelerating their entire economy, because I think that they overestimate their power
to control everything.
I just don't think that they realize that not everybody's going to cooperate. So the whole export-driven economy is going to be difficult for them to transition away from. And I think that they don't have the technology on the semiconductor side. I think that Taiwan is the biggest flashpoint potentially on the planet. I think that the Chinese situation is dangerous. I have things that I've been writing a novel about that have to do with how coronavirus really happened. So, I don't have a lot of positive things to say about the Chinese government. And I think that, like people all over the world, propaganda works. We see it in this country, we see it in Europe, we see it everywhere. Propaganda has worked for a long time. And from a psychological standpoint, will continue to work because we like to blame things on foreigners. And it doesn't matter if we're American or Chinese or European, we like to blame it on the foreigners. So I am afraid of the economic impacts that China could have on the rest of the world if they decelerate and destabilize.
Okay. I know you also keep an eye on another region. We used to talk about Iran a lot, and they have a new president, and Israel has a new prime minister, and the U.S. has a new president. What kind of mix do you expect? Anything? What do you expect out of the region now, especially with Iran and what's happened with our withdrawal from Afghanistan? It, kind of reminded me of when the Soviet Union pulled out, and it wasn't much longer after that before they had major problems and dissolved. What's your feel on what's happening out there?
So about 15 or 16 years ago, it started to become apparent to me that the reason we got rid of Saddam Hussein was so that there was no longer a buffer between Iran and Saudi Arabia, and that they would have to deal with each other. And that facilitated arms deals for us under multiple presidents. And now what you're seeing, and I've long thought there'd be a war there by now, more than the typical war, the proxy wars. I thought there'd be a bigger blow up. And what became apparent to me during the Trump administration, and maybe this would have been the same under a Hillary administration, I don't know. But I don't think there's a lot of stomach for fighting in the Middle East anymore.
Yeah.
I think pulling out of Afghanistan was part of that.
Right.
And it's because we don't really need them anymore, right? Our imports of OPEC oil are way down. And I think that we are leaving that part of the world to itself to settle itself out. I think that the great powers, and maybe China's going to take a shot, but I think that the great powers realize that these are fires that outsiders can't put out, and maybe even the people who live there can't put out. So a lot of it revolved around oil for decades and decades. And now that we're at the end of the oil age, or starting the end of the oil age, second inning, whatever it is, I think you're going to see more and more of the U.S. pulling out of the region. And I say that with a sister-in-law that's in Iraq right now, on the Syrian border. I believe that you're going to see an attempt made by Iran to integrate into the world, because their view on converting everybody to Islam is that they can do it without having to do it forcibly, right? That we'll all just adopt it. And, I don't think that's true, but I think that you're going to get a nuclear deal. I think that you're going to see more and more pressure on the major countries in the region to support the region. I think pulling out of Afghanistan is part of putting pressure on Iran, because now they have to deal with that on their border. There's been a concerted effort since 9/11, and I'm writing about this right now. One of the things, and if you haven't watched the Apple special on it, it's worth taking the free trial to Apple TV to watch this special on 9/11, is since 9/11, the United States made the concerted effort to start using less oil from the region and to go and kick some ass and then proceed to withdraw, which is what you're seeing right now.
Okay.
So we have fewer troops in the Middle East. I think pulling out of Afghanistan was later than it should have been. But I think it all is part of a long game that people like Dick Cheney believed in. And we are seeing the end of the long game of the United States in the Middle East right now. And that might cause instability. It might not, probably will. And if you get that war, that'll be your spike in the price of oil. If not, now you have China in the region. Iran and Saudi Arabia have to deal with each other. Iraq is the rope in the middle of the tug of war game. Syria and Afghanistan are, I think Trump probably described those relatively appropriately because they've been bombed into oblivion.
Okay, Kirk.
I think that you're going to see a lot of change there, and it might not be for the good.
Okay, so we should probably keep an eye on the flashpoint in the South China Sea and Taiwan. I guess there's major military exercises there. The middle of the month, I think that we place a lot of subs there, and we're doing joint exercises with Taiwan, and because of that, China's doing something prior. So you think that's the new flashpoint in the world? It's not new, but the one to pay attention to.
Yeah, I think the Middle East is part of the game there as well. It's part of soaking up resources from our enemies. But I think Taiwan is the one place where if Xi oversteps, that is the one place where I could see a conflict that evolves past a proxy war. And there's not a lot of places on the planet where you can say, our guys will mess around with their guys, but pretty much we leave each other alone. I think Taiwan is a place where
there are no proxies for Taiwan.
There are not, right? I mean, it's either they land on the beach or they don't.
Yeah.
And it's
well, usually it's isn't it first terrible financial conditions before something like that happens, and isn't kind of what we're seeing in China is that they have half the above ground food stock, grain stock. They're preparing for some type of famine. China's the one to look for, and Biden's kind of a hawk when it comes to China and Russia. So everyone thinks he elected Democrat, and they're going to be for peace, but he's kind of a hawk. Where's the best place for people to follow your writings? You're a great thinker, Kirk. I always like listening to you every time you've been on here, and I know you do a lot of writing. You're
right.
prolific with your thoughts, and you're a long-term thinker. So here, Fundamental Trends is Kirk's one. Okay.
And I have a free library card here, so you can get all the macro and reports, and usually about a piece per week. And then also over at Seeking Alpha, hey, one thing I will tell you about Taiwan, because you brought up that Biden is potentially a hawk. I did not like President Trump, and I think everybody who listens to me knows that. However, I'm not in love with Joe Biden either. And in fact,
I know you mean.
You know what I mean?
Yeah.
Yeah. And I put that out there just so people don't think I'm super far in either direction. I'm a centrist. I've always said if you can't reach the middle, you probably aren't helping. I think that ultimately, unless there's mistakes made, I think China's going to end up getting some sort of a deal on Taiwan, maybe extending the current arrangement. I don't think the United States ultimately has a reason to protect Taiwan. I think we have a reason to threaten to and make sure that China doesn't go in there and completely take it over. So I think there will be a deal at some point. And I think the thing that you can watch to really understand that is Intel.
Hong Kong? What they did with Hong Kong?
No. I mean, Hong Kong is attached to China, so you always knew they were going in there. Taiwan's out in the water. It's an island, right?
Yeah.
But you can tell that we are preparing
them arms.
And that's fine. We can sell them weapons. We make money on that, and they can, it's part of the negotiation, right? Try to negotiate from strength. Just like we started using our own oil with fracking to extract ourselves from the Middle East as we transitioned away from oil altogether. Our semiconductor industry is moving back home. And Intel is throwing $130 billion into developing a European and American fab system and supply chains. Taiwan Semiconductor is building in Arizona.
Right.
Why do you think those things are happening?
Yeah.
It's because we know that the capacity in Taiwan is probably going to go to China at some point.
Got it.
So you negotiate that and you say, okay, how do we avoid a war in Taiwan? And then we both get our semiconductors, because semiconductors are like oil was, right? Oil was the most important thing in the world until recently. And now semiconductors are the most important thing in the world. And who knows what's going to be the most important thing in 20 or 30 years. But that's what I see coming with Taiwan. I think that mistakes when you're operating at that high level that happen, though.
I think your black lab is the most important thing in the world to you.
Yeah, she's 14 in November.
Oh, wow. Yeah. Okay.
That picture up there is I took her to New York, Times Square, and I let her off the leash. And she didn't go nowhere. She just sat down and looked around.
Yeah. Well, it's been great talking to you, Kirk. And I do encourage people that are listening to us live or watch a video later to just go and check out Kirk's readings and some of his content. And if you like long-term thinking with potentially some short-term ideas, here's where you go. So thank you, my trading warrior brother, for
thanks a
hanging
lot,
out
Dale.
with us
I'd love
today.
to get you on my program here real soon. I know we've been talking about it.
Okay. We'll do it. We'll do it, buddy.
All right. You take care.
All right. So that's a wrap. Anthony saying thank you. And we enjoyed it, and everyone have a good day, good hunting, be careful. I think ECB tomorrow, and we'll see everyone for that event. Remember, don't just count your pips, count your blessings, and you can join the team in 14 minutes for the morning edge. Adios. Thank you, Kirk.
Thank you.